Good morning. I have come with module 5 of income tax. So, the first two modules I have explained the basic concepts. Module 3 we have learned the computation of residential status. Module 4 we have learned the distinction between capital and revenue. Now, this is the last module in the introduction chapter, that is computation of incidence of tax. When I taught you residential status, I told you residential status is divided into resident, not ordinarily resident, and non-resident. And the tax liability will be different for these three categories. That is the importance of doing the residential status. For a person to pay tax, we have to classify him as either resident, not ordinarily resident, and non-resident. So here it is very important. Once we will decide that whether he is a resident, not ordinarily resident, and non-resident, we can do the incidence of tax. Residents will be paying tax for all the incomes except foreign untaxed income bringing to India. All of the cases they will be taxed. Non-resident will be getting the maximum exemption. They will not be paying tax in all cases. Whereas not ordinarily resident will be getting some exemptions. Some cases they will be paying tax. So this concept we will explain with the help of 6 rules. I have pointed it as rule number 1, rule number 2, rule number 3, rule number 4, rule number 5 and rule number 6. Then you have to remember that when I worked out the problems also, just for clarity, I am giving the reference as which rule we are applying in the situation. You don't have to write that rule when you are doing the examination problem. This is just for your reference. I am not meeting you face to face. That is why I thought I will just give you the reference so it will be easy for you. I am going to explain 6 points or 6 rules. So the first rule you can see that income received or deemed to be received in India. It is immaterial whether it is earned in India or in a foreign country. You have to remember that any income for anyone, resident, not ordinarily resident or non-resident, it will be taxable in all the cases. Say for example, the salary I am getting, it's an Indian income. It will be taxable if I am a resident, not ordinarily resident or non-resident. Indian income received, or if I am going to receive also. See for example, if 2 months now with this lockdown and all, if government has delayed the payment of salary for 2 months, then also I am supposed to receive my salary, that will be an Indian income, it will be taxable. Next rule is so rule number 2. Rule number 2 is income earned in India, whether received, paid in India or outside India. So income earned in India. See, sometimes one income will derive in a foreign country. See, for example, the services rendered in a foreign country, or sale of a plant or a machinery or a house property. But we are bringing the income to India. So what will be the condition? So then also it will be considered that amount we are bringing it to India in the previous year. So it will be considered as an Indian income and it will be taxable for all the cases. This we are calling it as rule number 2. Resident and ordinarily resident, not ordinarily resident and non-resident. These are the first 2 cases. In all cases it will be taxable. Rule number 3 is income earned and received outside India from a business control or profession set up in India. Income may or may not be remitted to India. This point is very, very important. You have to remember that. Point number 3. This is been in business set up in India. Income earned and received outside India. Outside India meaning from a foreign country. And another thing you have to remember that business is registered in India or a profession registered in India. This point has a relevance with point number 5. If it's not related to business income, income earned from any other source, maybe royalty, dividend, interest, patent, sale of patent rights, sale of copyrights, sale of agricultural property, anything like that, it will come under point number 5 or rule number 5. Business income or profession income, income received from other countries, you have to remember that it's a rule number 3. So first 2 cases it will be taxable. For the non-resident, it will not be taxable. Point number 4, income earned or received outside India from a business control or profession set up outside India. Income is also earned in a foreign country or also received outside India. That meaning also received in a foreign country. So the rule will be First two cases it will be first case only it will be taxable, other two cases it will not be taxable. So for resident you have to remember that if you're bringing the income to India, it will be always taxable. See here, not ordinarily resident is not paying tax and non-resident also is not paying tax. Point number 5. See, I told you there is a link between point number 3 and point number 5. So point number 5 is income earned and received outside India from any other source other than point number 3. See, I told you it can be dividend received, interest received, sale of house property, agricultural income, sale of patents, sale of copyrights. So anything other than business income or professional income from received from for a foreign country. So what will be the taxability? For resident and ordinarily resident, it will be taxable. Other two cases, it will not be taxable. Last point, we are coming to the point number 6 or the rule number 6. This is very, very important. Usually in all the examination questions, we will include this question. So here, income earned and received outside India in the years preceding the previous year in question. And if the same is remitted to India during the current previous year. See, for example, you earned a foreign income. See, for example, your parents were working in Gulf countries for last 20 years or 25 years. Now with the lockdown, they lost the job, they are coming to India. So what will be the situation? That is foreign income. They what all they work, whatever they worked there for 25 years. Now they lost the job, they are bringing it to India. So it's a past untaxed income earned in earlier years. So that they are bringing it to India, it is not taxable in all the cases. When I explain the first point also, resident will get only exemption in these cases, it is not taxable. In all the other 5 points, the income he will be paying the tax. So resident, here he is getting the exemption. So this point you have to remember, past untaxed income, if you are bringing to your country, it will not be taxable. Now we will do the problem. So the problem, which of the following incomes are taxable when the residential status of Mr. A is resident, not ordinarily resident and non-resident? So these are the 3 options, whether he is resident, not ordinarily resident and non-resident. First one is income accrued in Canada but received in India, it's 2000. So how we will see that? We have to see this computation when we are doing computation of total income of Mr. A for the assessment year 2021. The title is very, very important. You have to write that and you have to make it a table like this. So nature of income, whatever is given in the question. Resident, not ordinary resident and non-resident. The format you have to make. We expect this answer in a tabular form. So here, income accrued in Canada but brought to India. So that is an Indian income. First point you remember, income, Indian income earned in India or you are going to receive in India. So rule number 1 is the case and it will be taxable in all the cases. Point number 2, rupees 5,000 earned in Africa and received there but brought to India. Foreign income received in foreign country but we are bringing it to India. So what will be the rule? So this, it's rule number 5. It's not business income or professional income. It's income from any other source other than business or profession. So resident, it will be taxable. Not ordinarily resident and non-resident, it will not be taxable. Rule number 5. Now, point number 3. Rupees 5,000 earned in India but received in Canada. See, earned in India, that's very, very important. Income earned in India will be taxable in all the cases. Rule number 1, 5,000 will be taxable in all the cases. Point number 4, rupees 10,000 earned and received in Sri Lanka from a business controlled from India. Business controlled from India meaning business registered in India. Rupees 10,000 earned and received in Sri Lanka. So here, you have to remember that rupees 10,000 earned and received in Sri Lanka from a business controlled from India. So this is rule number 3. Rule number 3 is taxable for both the cases. The last case non-resident, it will not be taxable. So income earned and received in Sri Lanka. Rule number 3, it's business income. Business income, it will be taxable for the first 2 category. It will not be taxable in the other case. Next is house property income computed from Sri Lanka, 2000. House property income, it is not business income. So you have to remember, if it is not business or professional income, rule number 5 will be applicable. So house property income computed in Sri Lanka, only for the resident, it will be taxable. Other 2 cases, it will not be taxable. Now, the next point I told you while explaining itself, rupees 4,000 was past untaxed foreign income which was brought to India during the relevant previous year. Rule number 6. I told you all the examinations we will include this point. So you are writing past untaxed foreign income. I gave you the example. Your parents working in a Gulf country. Now they lost the job. They are coming to India. What all their savings? They are bringing it to India. It is not taxable in all the cases. Not taxable. We are writing nil. Next point is the last point for this question. Profit earned from a business in Kanpur, 10,000. Kanpur within India, it is an Indian income. So it will be taxable in all the cases. It's rule number 1. Always you remember, you have to write the total also. Table format, you have to write the question and with the values. I have seen that when we'll ask the question sometimes, what the students will do, they will write whether it is taxable, not taxable. You will get 0. When you are giving the question with the values, you have to write the values and you have to take the total. See, this question was 7 points. If it's a section B question for 8 marks, all correct answers will get 1 mark each. So 7 into 1, 7 marks you will get. 1 mark we will give for totaling. So that is 7 plus 1, 8 marks we will allocate. That is how we are allocating the marks also. Second problem. Same, compute the gross total income of Mr. A for the assessment year 2021 if he is a resident, not ordinarily resident and non-resident. First point is interest in German development securities. 1/3 is received in India, 51,000. Here one important adjustment I want to tell you. When an income is received in 2 countries. See, this point is some income is received in Germany, some income is received in India. So the same point you have to divide into 2. So you can see the question in the same format. You have to remember table format. First point is interest from German development securities. It is received in India. 1/3 is received in India. It is Indian income. Rule number 1. It will be taxable in all cases. 51,000 into 1/3. 2/3 is received in Germany. That is rule number 5. That is any income that is received in Germany. That is rule number 5. Any income other than business or profession. So that is 34,000 will be taxable only for the resident. Other 2 cases it will not be taxable. So 51,000 into 2/3 is 34,000. Now point number 3, point number 2, income from agriculture in Bangladesh remitted to India. Income from agriculture in Bangladesh. When I taught you section 10 exempted income, I told you income from agriculture in India is exempted under section 10. But income from agriculture in a foreign country will be taxable. So this is the condition. So you see that second point, income from agriculture. It's a foreign country. Rule number 5. It's not business or profession. So rule number 5 will be applicable. 31,000 will be taxable for the resident. Other 2 cases it will not be taxable. Third point, income from property in Canada received in USA, 1,10,000. Income from property in Canada received in USA. So you see the computation. Income from property in Canada. It's not business income or professional income. It's rule number 5. It will be taxable only for the resident. Other 2 cases it will not be taxable. Next point, rule number 4. Income earned from business in Kuwait, business being controlled from Mumbai. That is important. Business being controlled from Mumbai meaning company registered in Mumbai. It's an Indian company and it's received in 2 countries. 25,000 is received in India and the remaining amount is received in Kuwait. So what will be the classification? I told you when an income is received in 2 countries, that same point we will divide into 2 headings. One is received in India, rule number 1, it will be taxable in all cases. Indian income taxable in all cases. Second one is received in Kuwait. It's business income. Therefore, rule number 3 will be applicable. Resident and not ordinarily resident, it will be taxable and it will not be taxable for non-resident. Rule number 5. Question number 5. Dividend from an Indian company rupees 15,000. When I taught you section 10 exempted income, I told you again and again income from an dividend from an Indian company is exempted. This you have to remember when you calculate incidence of tax and income from other sources when you do the computation. Because usually we will include this question and if the students are not thorough with that, they will write the value and they will get the wrong answer. So dividend from an Indian company dividend from an Indian company, we are not writing nil. Please remember that we are writing exempted under section 10. You have to write exempted under section 10. Next point is royalty received in Singapore from Mr. D, a resident in India, for technical services provided for a business carried on in Singapore. So it's technical services. Now we'll see what is the question, what is the answer. So this royalty received in Singapore, it's not business income or professional income, it's royalty. So it's point number 5. It will be taxable only for resident. 25,000 will be taxable for resident, not ordinarily resident, and non-resident it will not be taxable. Next point is profit from a business in Chennai. This business is controlled from Singapore. 1,25,000. Profit from a business in Chennai. It's an Indian income. This business is controlled from Singapore. We will see the condition. Profit from a business in Chennai. Indian income 1,25,000 taxable in all cases. Rule number 1. Profit from Chennai. Business in Chennai. Indian income. Now, next question is profit on sale of a building in India but received in Nepal. So, you have to remember that it's not business income or professional income, house property income, capital gain, sale of profit on sale of a building. It's a capital gain. See how we will do that. Profit on sale of a building. Profit on sale of building in India but received in Nepal 2,50,000. So here profit on sale of a building in India 2,50,000. It's Indian income but received in a foreign country. Rule number 2 will be applicable, taxable in all cases. Indian income but received in a foreign country. Now point number 9, income from agriculture in Punjab received in Mumbai. Agricultural income in India is exempted. So this income from agriculture, when the same problem itself, agricultural income from Bangladesh, it was taxable. This is agricultural income from India is exempted in all the cases as per section 10. You have to write exempted, not to write nil. Nil we will write when it is not taxable. Next question, next point is profit from a business in Indonesia. This business is controlled from Delhi. Within bracket, 60% of the profit is deposited in a bank there and 40% is remitted to India, rupees 40,000. When I taught you the importance of the income concept, whatever you receive as income, you have to pay the tax. How you spend income is not the concern of the income tax department. They will not listen to the concern. You can go and claim that you have spent the entire amount, but what you receive, you have to pay tax. Whatever gross salary or whatever your gross income, you have to pay the tax. So always remember that we will not look at how he had spent that income. We will concentrate on that 40,000. So income earned from business received in India 25,000. Taxable in all. Profit from business in Indonesia, this is 40,000. You have to remember it's business income. It will be taxable. Rule number 3, 40,000 taxable in the first 2 cases. Last case, it will not be taxable. Last case, it will not be taxable. It's business income or professional income, rule number 3. Now, last point is interest received from Mr. D, a non-resident, on the loan provided to him for a business in India, 28,000. So here you have to remember interest received from Mr. D. It's rule number 1, Indian income taxable in all cases. So total income also you have to take total income, that will get different marks. 11 points were there, total 11 points. So 1 mark each. If it's section C, 12 mark question, 11 marks, 1 mark each for all the correct answers. Each point 1 mark each and 1 mark for total we will give. That is how you have to get the correct value and correct answer, and the full marks you can score for this paper. Now, third question, Mr. S, a foreign national, furnishes the following particulars of his income relevant for the previous year 2019-20. Please remember, a foreign national, foreign citizen, Indian national, Indian citizen has no relevance with incidence of tax. This has got an importance when we are doing the residential status. See, we have worked out problems foreign national. 60 days. When you're taking 60 days, they are getting exemption for three cases. One is when a person is going abroad for employment. Second one is crew of an Indian ship. Third one is a person settled abroad, but he's coming to India. So these three cases. So one student was asking if they're going for higher studies to a foreign university for 2 years, whether they will come under the exemption of 60 days. They will not get, only for these three cases. So employment outside, crew of an Indian ship, and people settled abroad but they are coming to India for a holiday or some other reason. Only these cases. In the residential status, whether it's a foreign citizen, foreign national, Indian citizen, Indian national will make a difference in the calculation. Incidence of tax, it will not make the difference because we are taking three different classifications. If he is a resident, not ordinarily resident, and non-resident. So you just ignore this, whether foreign national, foreign citizen, Indian national, Indian citizen. So we are going to do the first question. Profit on sale of plant at London, one half is received in India, 1,46,000. Please remember, when an income is received in two countries, you are dividing it into two subpoints. First one is received in India. Indian income, rule number 1, it will be taxable in all cases. Second one is received in UK. You have to remember, it's rule number 5. It's not business income or professional income, taxable only for the resident. Other two cases, it will not be taxable. Next is profit on sale of plant at Delhi. Plant at Delhi within India, Indian income, one half is received in London, 1,02,000. So two countries. So you see the condition, it's an Indian income. So remember, it's received in two countries. That point we are dividing into two. Received in India, 1,02,000 into 50 by 100, 51,000. Rule number 1, taxable in all cases. Received in UK, rule number 2, Indian income, plant sold in Delhi, Indian income received in a foreign country. Rule number 2, taxable in all cases. Now, point 3. Salary from an Indian company received in London, one half is paid for services rendered in India, rupees 60,000. Third point, salary from an Indian company. This also two countries they are receiving. We are dividing into two subpoints. One is salary received in India, rule number 1, taxable in all cases, Indian income. Second one is services rendered in UK. It's not business or professional income. Rule number 5, it is taxable only for the resident. Other two cases, it will not be taxable. Point number 4, interest on UK development securities. Entire amount is received in London. It's 40,000. So interest on UK development securities received in London, it's rule number 5 because it's not business income, it's not professional income. Income from securities, interest or dividend, it's resident only, it will be taxable. 40,000 will be taxable for the resident. Other two cases, it will not be taxable. So the fifth point is income from property in London received there, rupees 30,000. Income from property in London. It's house property income. Income from property in London received there. Rule number 5. Because it's not business income or professional income. So that is resident will be paying the tax. Other two cases it will not be taxable. Remember we are writing nil, not exempted. Exempted we will write only for section 10 when it's an exempted income. Resident it will be taxable 30,000. Rule number 5. Now, profit from business in Delhi managed from India, 49,000. Profit from business in Delhi managed from India. Indian income, rule number 1. Indian income received in India, 49,000, taxable in all cases. Point number 7, income from agriculture in London received there. Half of which is used for meeting hotel expenses of his son in England and the remaining amount is later remitted to India, rupees 25,000. I told you how he had spent the amount we will not consider. That is not the concern of the income tax department. Your income you can spend the way you want. But we are concerned about the amount he received which he has to pay tax. So 25,000 we will see. Income from agriculture in London, 25,000. It's rule number 5. Rule number 5, it's taxable only for resident because it's not business income or professional income. Income other than business or profession, rule number 5. Only for the resident it will be taxable. Other two cases it will not be taxable. Next is dividend within bracket gross received in London on May 6, 2020 from a company registered in India but mainly operating in UK, rupees 17,000. So here you have to remember that gross dividend. See now gross dividend and net dividend will make a difference only in the computation of income from other sources. If you are getting net dividend, you have to convert it into gross dividend. Now you remember that we are taking the tax for gross value. That is why it's given in the question, it's gross. We don't have to, the conversion we don't have to do. That is why just you have not learned conversion now. We will learn only at that time. So now you take the dividend within bracket gross. It has no relevance now. The only thing you have to remember, we have to take the gross dividend only. So 17,000. So here dividend from an Indian company. So dividend from an Indian company, it is exempted under section 10. Exempted in all the cases. Please remember that it's exempted. We are not writing nil. Now ninth question is rental income from a property in Nepal deposited by a tenant in a foreign branch of an Indian bank operating there, 12,000. How he deposited that money and all is not our concern. Whether tenant has deposited, landlord has deposited, we will not consider all that. We will check only the value, 12,000. So here it's rule number 5 because it's not business income or it's not professional income. Only for the resident it will be taxable. Other two cases it will be not taxable. Now the last point for this, gift from a relative in foreign currency, 1/3 of which is received in India and remaining amount is used for meeting educational expenses of his son in USA, rupees 3,70,000. We don't have to worry about how he had spent that amount. We will take only 3,70,000. See, when I taught you section 10 exempted incomes, I told you dividend from an Indian company is exempted. Agricultural income is exempted. Gift from a relative is exempted. I told you there are certain loopholes in the Gift Tax Act and agricultural income tax. The central government is going to change the rules. They are going to amend the act, but it does not happen anytime it will happen. But for the time being, we have to take that gift from relative is exempted. The relative definition is own brother, own sister, parents or grandparents. This all you will learn in income from other sources. So the last point you have to remember, gift from a relative is exempted under section 10. So now you are writing the total taxable income. So the total also you have to write total 10 points. If it's a 12 mark question, 10 points we will give 1 mark each. So if it's all correct, you will get 10 marks. Then the total we will give 2 marks. That is how you can score the full marks, 12 marks. Now we are coming to the last question, problem number 4. Mr. S, a foreign national. I told you it has no relevance for incidence of tax. Only when it's a residential status computation, we have to see whether it's an Indian citizen or a foreign citizen. So S, a foreign national, furnishes the following particulars of his income relevant to the assessment year 2021. First point is income from property in New York received there 1,20,000. So you see that 1 lakh income from property in New York. It's not business income or professional income. It will be taxable only for the resident. Other two cases, it will not be taxable. Point number 2. Income from business in Kolkata managed from Singapore, 2,40,000. Income from business in Kolkata, it's Indian income. Fully taxable. Rule number 1, in all cases, it will be taxable. Point number 3. Profit on sale of machinery in California. 1/2 is received in Kolkata, 90,000. When it's received in two countries, what you have to do? You have to divide that point into two. One is received in Kolkata. Rule number 1, taxable in all cases. Received in California, it's not business income or professional income. So rule number 5, first resident only will be paying tax. Other two cases, it will not be, they will not be paying tax. Point number 4, dividend. Now the gross dividend. You don't have to think about net or gross. It's the gross dividend. That's the value you have to take. received in Thailand from a company registered in India. Registered in India meaning it's an Indian company but mainly operating in Thailand. This is just to confuse the students. Company registered in India, it's an Indian company. It is exempted under section 10. So you are writing exempted. You are not writing nil. You are writing exempted. Words are different. Income Tax Act has got different meanings, different words. You have to use it properly. So fifth point, income from a house property in Dhaka deposited by a tenant there in a foreign branch of SBI 36,000. We will take only the 36,000 value. How, whether he deposited, whether he spent that amount and all, we will not consider. House property in Dhaka from a foreign country. So 36,000. Income from house property in Dhaka, for it's rule number 5, taxable only for the resident. Other two cases, it will not be taxable. Rule number 5, because it's not business income or professional income. Now, point number 6, gift in foreign currency. Gift, always I told you the treatment. Rupees 3,50,000 from a relative, one half received in India and the balance spent in New York. How he had spent the amount we will not consider. Gift from a relative is exempted under section 10. You have to write exempted in all the cases. Next point is income from agriculture in Burma. Agricultural income in India is exempted, but it's from a foreign country, different treatment. It will be taxable. 45,000 received there and 1/3 is spent while visiting there and 2/3 is remitted to Kolkata. We are not bothered about how he had spent that amount. We will take that 45,000. It's income from agriculture, meaning it is not business income or professional income. It will be taxable only for the resident. It will not be taxable for other two cases. Now we are coming to the last point. Income from profession as a management consultant in Singapore received there. Profession was set up in India, 2,20,000. Profession was set up in India, Indian income. So here last point is income from a profession as a management consultant received in Philippines and the unit is set up in India. It will be rule number 3. Rule number 3, the rule is either business income or professional income set up in India. Any other income we are using rule number 5. So resident and not ordinarily resident will be paying tax. Non-resident will not be paying any tax. So total taxable income we have to take. See here 8 points are there. 1 mark each we will give for the points. So 8 marks you will get and 2 marks we will give for the totaling if it's a 10 mark question. So this is how we will allocate the marks also. Now I have explained all the concepts, the basic concepts in module 1 and module 2. Residential status computation you have learned in module 3. Distinction between revenue and capital we have learned in module 4. And module 5 we have calculated the incidence of tax. So the introduction part we have completed. Now what we are going to do is we are going to start with the computation of salary. That is very, very important. Each, see if it's gratuity, pension, encashment of leave. Everything has got different computations. The basic salary structure I will explain, the definition, everything. Then we will take one by one calculation. It is not difficult. Don't think that computation of income tax is difficult. I am telling you in the systematic way and you can score the maximum marks if you follow it properly. So with this and I hope that our students will get good marks and they will make me happy. That will be the happiness. So lockdown period, make use of your time. Do the problems again and again. Give me your feedback. If there is any suggestions for improvement, please let me know that. Thank you and I will see you with the next module, computation of income from salary.